With a strong week in the books, markets now turn their attention to the July CPI report coming out on Tuesday. Can the numbers derail the recent rally? Let's bring in Jack Janasiewicz. He's a lead portfolio strategist at Natixis. Jack, great to have you with us. What are your expectations? Do we actually start seeing inflation from tariffs show up?
You know, I think if you look at the most recent prints that we've had, we're seeing signs of it starting to emerge. But, you know, the bigger issue here is simply that spread between the goods and services side, right? We're seeing the goods prices drift higher as a result of those tariffs, but the services side of the equation continues to disinflate. And those are really somewhat offsetting each other. So if that spread begins to widen out in favor of the goods inflation, then I think we got some things to maybe potentially worry about in here.
Yeah, how concerned were you about that jobs number last week? Not that I want to talk about a week-old number, but in the context of, you know, expecting CPI, expecting retail sales as well next week, how will you piece together those pieces if we do see the goods number start to inflate?
You know, there's plenty of data points showing that we are seeing a slowing of the economy. And obviously, the labor market is going to be front and center because that's going to lead right into consumption. And when you start to look at the guts of that jobs report, you know, there's plenty of weak points you can sort of look at in there, whether it be the employment to population ratio for the prime age workforce area, what the labor force participation rate to the jobs diffusion index. You know, they're all pointing to weaker sides of that job report. So we are seeing some weakness in the labor market. It's just a question of whether that starts to accelerate in the near term.
Jack Bonawyn here. Would you mind speaking a bit to consumption versus AI spend CapEx as it pertains to, or as it relates to quarterly GDP figures, and perhaps what we might be able to tease out of that data and dynamic there?
Yeah, I mean, that's the key for us, and one of the big takeaways from the second quarter earnings numbers, right? We're really firing, it seems like, on one cylinder, and that one cylinder is that AI CapEx spend, right? When you look at contributions to second quarter GDP, the amount of AI CapEx spend actually outpaced what we saw from consumption. And so that big driver right now is AI, and that's all eyes on that. If that starts to roll over, you're going to be looking at what the next engine could be for growth, and that's going to be a big question mark going forward.